Hey guys, this is Ryan Short with Century 21 here today with Mo Heath, a local mortgage officer, to go over some of the details. Today we're going to talk about closing costs. It's kind of a broad term that everyone knows in real estate, but we don't really know all of the details about it. So I wanted to speak with a professional so you guys can find out what closing costs means. So Mo, what's included in closing costs?
So the main things when you hear about closing costs, there's kind of three categories that I break it into. One is the escrow deposit. So you're going to pay like your first year of homeowners insurance up front.
Okay.
You're going to pay a couple months of taxes, and then they'll collect for a couple months of homeowners insurance to put in the escrow account as an escrow reserve. The other category is going to be your title fees. So your title fees are going to be lender's title insurance, endorsements, recording fees with the county, and closing fee with the title company where you're closing. And then the third category is loan costs. So loan costs are going to be like your appraisal fee. There can be origination fees, underwriting fees, processing fees, lots of different things that can be in loan costs that are associated with the lender themselves.
Got it. So essentially, the first two categories you went over, that's going to be the same no matter where someone does their mortgage, right?
Yeah, that's going to depend more on what title company they choose to use. And escrow deposit is just going to depend on, what insurance company you go with, size of the house, lots of different factors there.
Great. Yeah. So going through closing costs, to kind of repeat back what he said, your title, insurance, things like that, that's got nothing to do with the mortgage officer. It will be the same at any loan place you go to. It's going to be the same. And then your other escrow items are like property taxes. That's all decided based off the property you pick. Has nothing to do with even the title company, your real estate agent, or anyone else. It's solely based off the property. And then let's talk a little bit more about something that you are a professional at, and that's the loan costs. So what's the difference between maybe using someone like you, a mortgage broker, versus going into a credit union or something like that?
Yeah, so the two big differences is one, we shop between over 10 different lenders, so I'm a mortgage broker. So when I meet with a client and I get their scenario, I'll run it with a whole bunch of different lenders and try to find who's going to offer the best rate for that client. So that's the first big difference, is that we're very competitive on rates for that reason. The second is that the lenders we work with are wholesale lenders, so they pay me to find them loans essentially.
Oh, interesting.
So we're able to cut out some fees there that a lot of other places will charge, and there's lots of things that they can call it. They're going to call it, like I said, origination, underwriting, processing. Who knows what they're going to call it, but basically it's just them charging money so that they can make money.
Yeah.
And so that's the big difference with us, is we cut out all those fees. We don't have processing, no underwriting, no origination. We do have an appraisal fee still, but that goes to the appraiser. That's obviously nothing that goes to us. So that's kind of the big benefit there.
So that's really cool. So instead of someone coming and having to pay you to do the loan, the loan companies are paying you to send them their business, essentially.
Exactly. Their business model, you won't see advertisements for wholesale lenders. You won't see brick and mortar stores around town or billboards or anything like that. Their whole business model is that they pay mortgage brokers like me across the country to find the loans for them, so they don't have to go out and market and do all that kind of stuff.
Yeah, that's awesome. So it's kind of cool because I worked in the car industry for a long time, and I was the guy that'd go over the paperwork, and there's all those fees that everyone is always wondering what they are. I was really interested to find out that some mortgage places do the same thing, but one of the great things about working with a broker is you're not going to see this long list of different fees that you have no clue why you're being charged it, and they could be named anything. In fact, last month I had a client that had been working with another loan company, and they found out they weren't going to be able to get pre-approved, and their payment was going to jump up a bunch. And then I was able to work with Mo, and he was able to get them all approved and everything, and save them money in the long run. So what were some of the things in that deal that you're able to help save money for the client?
Yeah, so they had some loan fees, like an administration fee and an underwriting fee. That ended up being $1,300 or $1,400. Sometimes I see ones that are higher than that, but that's what they had. And then the big difference in that one was actually the interest rate. So the interest rate they were initially quoted was 4.125% on a USDA rural housing loan.
Yeah.
And so our rate was 3.75%, and then we cut out $1,300 in fees. So it ended up being $1,300 up front, but but I think 20 or 30,000. Did we do the math on that?
Yeah, I think it came out right about 20,000 in the
Yeah.
interest rate.
So 20,000 that they're going to save because they were able to use me versus another lender.
That's awesome. So do you think that the interest rate is different because you get to shop it out to more places to find the best rate? Is that?
That's typically, yeah, with that lender that we were quoting against, they were a correspondent lender, so they had one option as far as the rate goes.
Mm-hmm.
So if that lender is not competitive on, say, a USDA loan, they're still going to offer that rate, right? Because they have no other options. But with my 10 or 12 different lenders, we're going to shop between all of them and find who's offering the best USDA rate right now.
Oh, that's awesome. So it doesn't only just save you money now, but in the long run, because interest rate, that bit of difference saves lots of money. So that's our little interview that we wanted to shoot with you for you guys today, going over what closing costs really means and how you can save some money on your loan costs. If you guys have any questions about a pre-approval or refinancing, this is Mo Heath with Diversified. His contact information will be above, and he's the guy I trust and that I send my business to. And again, I'm Ryan Short with Century 2021. We'll see you next time.